We are live. Y'all should see it pop open now. Y'all see it pop open there. All right. So, let's talk about it here. Savannah, mind your business. Thank you very much. Okay. So tonight, as I said, we're gonna just be kind of going over the complete process, right? And so, in order to in order to really show you guys how efficient this process is, so that's one of the key things about tonight. I want to show you how efficient this process is. Um, so one of the main focuses is going to be um, time, right? Time is something you can't get back, right? You can't get time back. So not only are we going to be talking about the complete process, but what what can we get done in a certain amount of time, and what kind of results are we getting for that time as well, right? I don't want to just do this from a perspective of like, I want to just do this from a perspective of like, like trying to kind of perfectly retrace our steps. I'm doing it more along the lines of, here's how I get it done. So if you want to, you go ahead and pull out your stopwatches. All right, I'm give y'all a second. Go pull out a stopwatch. All right, and we're gonna time this thing. Okay, and let's see how long this truly takes. All right, now for the record, for the record, I have nothing open right now. Like I said, I'm gonna have to start from scratch pretty much. All right. So this is going to be the entire process of me going and pulling up all the sites I need to everything. All right. Um, shall I begin? Y'all ready? Y'all ready? Y'all got your stopwatches ready? Y'all ready to time this thing? Let's see how long this is really going to take here. All right. Let us begin. You can start your stopwatches now. Okay. So the first thing here we want to do within this process here, all right, is we wanna kind of take this large market and screen it on down, right? So speaking of screeners, let's go on over to Finviz, okay? And let's go over to the screener here and let's get started on this. Like I said, I'm not going to be doing much explaining. I'm gonna say what I'm doing as I'm doing it, but we're not going to do much explaining. Okay, so let's keep that in mind. Now, I'm going to do the usual. All right, I'm looking for companies in the U.S. right now. Not really doing any overseas investing. I want profitable companies. I want companies whose earnings are growing. I want companies whose sales are growing. All right. I want companies whose price to free cash flow. I want companies who's trading at a discount right now. Price to free cash flow under 40. I am down to 620 companies. I'm down to 620 companies now. All right. So from here, the next thing I want to do is I want to get like a sorting going, right? 620 companies, that's 31 pages. I want to sort that out because I don't want to I don't want to necessarily look at that many pages, right? So I'm sorry, I don't want to look at that many companies. I don't want to go from point A to point B. So I'm going to go ahead and I'm going to sort this out by market. No, sort it out by price to free cash flow. All right. I'm going to put this in, I'm going to leave it in ascending order. So now we have the cheapest, well, no, let's rephrase that. Lowest valuation companies on page one, highest valuation companies on page 31. I'm going to look at this as page 1 through 30, and I'm going to split this into 5 groups here. So that's going to be 5 groups of 6, right? So pages 1 through 6, already I'm saying I don't want none of these guys. They're cheap for a reason. Pages 27 through 30, I don't want any of those guys either. They're probably, too expensive for my blood. So the ideal group is going to be 7, 8, 9, 10, 11, and 12, right? 7 through 12, those guys, I'm going to look at those as my value investments. 13 through 18 are going to be um, my growth at a reasonable price, right? And then I'm going to look at 19 through 24 as being 19 through 24 as being the companies that if I want to invest in some growth. So let's actually focus on. I want to get some growth at a reasonable price right now. So let's go to page 13 here. Now, what I'm going to do, I'm going to identify, what's here right now that seems to be like a repeat offender, so to speak. Um, what sectors are standing out as offering this growth at a reasonable price right now. Let's see what we got here. All right, I see some healthcare, some tech, defensive, cyclicals, a lot of financials. I'm not gonna, take that particular bait right there, but right out the gate, I see 3 cyclicals here. All right. I see 3 technology companies. Okay. So I'm just kind of scanning. I'm just scanning first. Just scanning first. So cyclicals and technology. Um, all right. But a lot more cyclicals. All right. Okay. Now we got some more. Okay. Now we got like a stack of technology companies right here. All right. Mm-hmm. Okay. Just kind of scanning. Just want to see what. Just want to see what's on the table here. Just want to see what's on the table. So to me, it's looking like cyclicals, tech, healthcare, a lot of financials, but we got some industrials working their way in here at the top end, right? Got a stack of industrials here at the top end, which actually would tell me, being that they're coming in more at the top end here, industrials may be a little more expensive than tech and cyclicals at the moment. And actually, we've seen that when we look at the Morningstar figures. Morningstar shows that industrials are actually trading over their value right now. So we're gonna leave industrials alone. All right, let's come back down at the back end here. I'm going with cyclicals. Okay. So what I'm gonna do here is I'm actually gonna take this here and I'm gonna go sector, I'm gonna go consumer cyclicals, and boom, now I'm down to 60 companies, okay, which is actually a perfect number. This page right here in the middle, it's all I need right here. It's all I need. These guys right here. This is the group of stocks for me. All right. Now, once I got my sector picked out, the next thing I'm gonna do is I am going to start working through these investments and seeing what I can pick up on. All right. Now, for the record, one great way to do this would be to, you know, see who's in common, like like who would be on this first 2 pages here, and all for price to free cash flow, but who would also be on those first 2 pages for return on invested capital. Now I have easier ways to do that, get that done. So we're not going to be doing that. particular thing. Let's go ahead and take the first 10 names here. And what I'm going to do is I'm going to plug them into my, let's go over here to, all right, I guess I can put an indicator here, get over there. Google Sheets. All right. What I want to do is I want to see what these companies are, what they're doing for me in this regard. Let's get rid of this here for now. Get rid of that. Actually, wait, let me see something. No, okay. So yeah, so this isn't loading here. So we're gonna leave that alone. We're gonna rank them ourselves here. So let's first go and look to see what they're looking like. Let's go MCRI. We're gonna rank them ourselves here. So it's actually good that I get to rank them myself, or that I have to rank them myself, right? Because I'm just gonna create a little spreadsheet here. ROIC, ROIC rank. And we're gonna do price to free cash flow. And price to free cash flow rank. Okay? Keep it real simple. I wanna have at least 5 opportunities here. So we got a strong buyer with an exceptional outlook here. Resorts and casinos. So I'm gonna remember this here. We're gonna try not to get a bunch of companies in the same area. Looking strong, it's got everything we're looking for. All right. So we're gonna make them the first one here. Their price free cash flow is at 15.36. All right. Return on invested capital 25.51. All right. 25.51 and 15.36. Okay. And 15.36. We'll rank them in a second here. All right. Let me zoom into this so you guys can see it better. All right, there we go. Next on the list was CSV. This is carriage services, right? I'm just gonna go through these stocks. I'm just gonna see what their ranking is, right? So for now, here's what I want. I want stocks that have 1, 2, and 3. All 3 of these things have to meet all 3 of these elements. F score, return on invested capital, and relative strength. A bonus would be beautiful if they also are trading below the street value. Okay? So I'm going to look for this trifecta. F score, return on invested capital, and relative strength. They have to have all 3 of these things. Okay. They don't have any of them, so that's a no for CSV. Right? See how quickly I went to a no? That's a no. Moving on. Right? Now I'm going to be good once I get the first 5 locked in. Domino's Pizza, I believe that is DPZ. Okay. Once I get the first 5 locked in, then we good to go. So this is how simple it is. So far, I've done my screener. I found a sector with a lot of with a lot of stocks that are showing opportunities right now. and now I'm looking through those particular sectors to see what's good. All right, Domino's Pizza, they have the F score, they have the return on invested capital. What do they not have? They don't have the relative strength. Okay, so I'm gonna leave them alone for right now, but I'm gonna write them down as they are trading. Like I said, it's a bonus. They are trading below the. I'm gonna put them down as a 3 out of 4, no relative strength. Okay, so I'm gonna write them down, but they're not gonna make the cut. Booking, BKNG. They have to have 3 of those things there: the F score, return on invested capital, the relative strength. I want all 3 of those things. All right. So booking we have here trading below their their street value. F score is present. Return on invested capital is present. Um, just shy of that. Just shy of what we need. But their relative strength is better than DPZ though. All right, we'll make a note of that. I'm just gonna write that down and move on. Right, take your notes and move on. All right, GTX. It's been 14 minutes. I've already screened the market. I've already sorted the market out. I've already picked the sector that I want to be a part of, and I've already analyzed um what going on four stocks already. I'm just saying. Does that sound like a reasonable amount of things that I've gotten done in 15 minutes? What y'all say? All right, Garrett Motion, a buy with an exceptional outlook. Okay. Um, they're not trading at a discount, but they have the F score, the return on invested capital, and the relative strength. All right, let's put them on the list. Price to free cash flow 15.04. All right. 15.04. Okay. Okay, let's go to who's next. Just moving through the list. Allison Transmission, ALSN. They look like they may be trading at a discount, you know. That stock don't look like it's been going much places. Let's keep cooking. Okay. Um, very close actually. Oh no, so now if we were going based on our other rules here, they are at a discount, but they don't have the F score. They got the return on invested capital and the relative strength. All right, let's go and write them down. Got Allison, they got a 3 out of 4. Right? No F score. And the F score is a 4. I'm going to highlight that. Okay? So, Ulta Beauty brings back memories. Is Ulta still a good stock? Let's find out. This is it. I'm just looking for a good investment. You know, I've already I've already analyzed. Right. This is going on number 5 right now. Oh no. I'm sorry. It's going on number 6 actually. I forgot we got another one here. I'm sorry. Hold on. This one was GTX. This one was MCRI. I forgot to put the ticker symbol in. I'm tripping. All right, Alta, strong buy, trading at a discount to the stock street value. All right, F score of a 6, return on invested capital of 26.13. However, relative strength says they not been looking so good. So Alta, 3 out of 4, no relative strength. That might be the weakest relative strength we've seen so far. We'll come back around to that if we have to. Murphy USA, I believe these are the bed people. All right, are they selling a lot of beds lately? Let's find out. Hmm. We're looking for 5 potential investments that we can rate against each other. That's what we're looking for. We've got 2 out of those 5. We're going on 20 minutes. All right. So on average, you would say it took us about 10 minutes to find one potential investment. That sounds like a good time to me. Okay. We got the F score. We got the return on invested capital. We got the relative strength. Okay. We got another one. They must be selling some bears lately, huh? Okay. Got MUSA. 1987, 1834. I think I got that right. Let me double check. Yes, okay. So Murphy is in the running. Columbia Sportswear. Wow. When the last time y'all seen a Columbia coat? I'm about to go buy me a Columbia coat, man. That's prime quality right there, man. Who's buying a Columbia coat for the winter, man? Where y'all at? Let's cop some Columbia wear, man. You know, we can't let people forget about Columbia. It's the time to buy it when it's 97 degrees. Mm-hmm. Get it for cheap. Are you recording? That's why I'm recording. Yes. No, but I mean, you know, y'all can talk. Um, usually when usually I wouldn't ask any questions, you know. Okay, F score, price to free cash flow, relative strength. Columbia, looks like they selling some, nah, you know. Uh, so 12-11 and 27-14. Now here's what's interesting, right? Here's what's interesting about this. Um, we just went from saying we just went from saying we were averaging about 10 minutes to find one company to all of a sudden 4 companies in 22 minutes. You do that math, right? See how quickly that could turn around? I'm just saying. I'm just saying. All right. What we got here? Penske, PAG. Right. And when you're done, you could always look at more companies. Just for the record. When you're done, you can always look at more companies. All right. But I'm gonna analyze this five first. And I'll probably swap out 3 of them. I'll probably swap out when I'm done analyzing this 5, I'll probably swap out the I'll probably swap out the one that's already been picked and the 2 bottom ones. Oh, Penske's a sell with a negative outlook. Ouch. Still 5 below. All right. 1 second, guys. All right. Sorry about that. Sorry about that, guys. Let's see here. In 1 second here. All right. So these guys are 5 below, strong by exceptional. They got 1, 2, and 3. So 5 below looks like they cooking something. Well, they cooking something. Specialty retail here, and they're trading at a discount. So 12.98 and 25.69. 12.98. Oh, sorry. And 25.69, I believe it was, right? Let's double check that. 25.69. Okay. Okay, now actually in the meantime, wait, let me see something here. Wait, no, hold on. I need to do a no, sorry. D5. So D9. Uh, C5. No, say what? Hold on. Hey, give me 1 second here. Hold on. So, all right. Check. Okay. I think that works. Uh, let's see here. Mm, 1 second here. Mm, Let me see here. See if I can. Let's try this again real quick. No. All right, we'll just rank them ourselves. All right, now, so let's see it. So we want the actually no, I think I had it right actually. I think I had it right. Let's see here. I think I actually had it right. Let me do that again. So I'm just gonna. So this is in the event that we gotta this is in the event that we gotta rank them again. Let's say we have to do like maybe like another group of companies, right? Then all right, so we got F5, I think. F5, F5, F9. Okay. Yep, perfect. Okay. So now GTX stands out. GTX is number one on both ends, right? So GTX is the winner here. Okay. Columbia is the worst on both ends. They're the loser here. Okay. So that's just basically how you do it. So I'm just looking at it from who has the best return on invested capital and the lowest valuation combined, you know? And it seems like the craziest thing is these guys are like grouped in that particular way, you know? It just happens like to be that each one that was ranked a one was ranked a one, you know, on both ends. So that's pretty interesting. Um, so it's almost like the market is pricing them this way. But either way, so GTX is going to be the one that I'm going to want to dig into. MCRI comes in a strong second, and MUSA. Who are those guys again? Murphy. Oh, the bed people. Right. All right. So let's go GTX. All right. So this is going to be the one that I'm looking at here. And so the goal here tonight is the question becomes how quickly can I get to an investment decision? That's the key. So that means, am I buying? Am I buying the stock like or not? Okay, that's the question here tonight. That's what we're timing here. Okay, all right. I go GTX again. As you can see, definitely not trading at a discount here. I believe Murphy was trading at a discount. I did notice that Garrett Motion had a negative equity there. All right. But we'll see how this plays out. All right. Now, the next thing I want to do, let's go ahead and run the report here. In the meantime, while that's running, let's go into stock analysis. This is Doreen's favorite site. Let's go over here real quick. Let's pull GTX up. And I'm going to go over to their profile tab, go to their filings. I want to have, so let's start with, so these are the earnings release joints right here. All right. Mm-mm. See something real quick here. Secured several new light vehicle turbo programs. All right, so today, I'm actually gonna go with getting their earnings releases here, from the last few quarters. So Q1 2026, uh, 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 Q4 2025, Q3 2025. I'm getting the last four of them, and Q2 2025. All right, let's go to Gemini real quick. Okay. So what I'm gonna do with Gemini here, I'm gonna go ahead. I'm gonna upload these joints right here. Gonna upload those four earnings releases. One second here. Grabbing those. Okay. So now I'm uploading those in here. I'm gonna keep this really, really simple. I'm gonna say I'm gonna do an equity analysis agent in charge of finding patterns in earnings release data and information. All right. Uh, analyze the data as for quarters. Find for me the following. All right, colon. Number one, um, any recurring investments that should be red flag. Any current opportunities. Any apparent threats. Mm, key catalyst for growth. The financial uh, news. Six. Let's go with and last but not least, what has been the experience of the average investor over this period? All right, let's let them do that. Let's come back over here. All right. And let's actually zoom in a little bit here. All right. So let's find out a little bit more about Garrett Motion here. So they make turbochargers that help car engines run more efficiently and produce more power. They sell these parts to major vehicle manufacturers all over the world to help meet strict environmental rules. A big opportunity for them is creating new cooling and boosting parts for electric and hybrid cars. But they face a serious threat from the global shift away from gas powered engines. The stock price could increase if they keep their high profit margins while growing their share in the emerging green energy market. On the other hand, the stock could drop because the company currently has negative equity of $781 million. And for the record, I can see that right there. See, the price of the book was an NA. I had already caught my attention, which means they owe significantly more than the value of the assets they own, even though the company is currently very good at generating returns on its projects. This negative net worth creates a fragile financial foundation that investors must watch closely. Okay. Um, the Bull case says that they successfully dominate the hybrid vehicle market and use its high profit margins to rapidly repair their balance sheet. The bear case is a faster than expected transition to full electric vehicles makes turbochargers obsolete and leaves the company unable to pay off its massive debts. Now, I'm going to write down my first note here. My first note is going to be I don't believe EV adoption will move that swiftly. So, in this regard, um, when it's all said and done, uh, one of the one of the major issues that we see here for the stock is already in many ways here um, a non-issue. So they recently reported strong earnings, and moving on from that. Mm, Full year financial goals were raised to nearly $4 billion in total sales for the year. Simultaneously, the company launched a $250 million program to buy back its own shares and lower its debt costs by repaying $50 million of major loans. So on top of that, they're paying back the debt anyway. Okay. Okay. Let's go right to the forensic audit here. Let's see what's going on here. All right. Fundamentally broken balance sheet. We already know about that part. The ultimate risk is that the company is carrying over $1 billion in debt while relying on a narrow window of profits to pay the interest. All right. If interest rates rise, which we're in an environment where we're trying to get rates down. Timeless rule of risk management should never trust a business that is built on borrowed money and legal debt, no matter how fast it seems to be growing. Okay. Altman Z 2.04 officially flags the company as being under financial stress. Okay. All right, let's get over here. Let's take a look at some of this stuff here now. All right. Now, in my mind, I've already somewhat made up a decision here, just for the record. But let's keep going. Okay. So the company incurs cash payments and accounting charges for repositioning costs every single quarter. Okay, while management routinely treats this as an adjustment to show higher adjusted EBIT, it acts as a regular recurring operational drainage. Okay. High factoring in notes discount fees. So Garrett relies heavily on factoring and notes receivable discounts to optimize its cash flow statement. For instance, factoring impacts swung free cash flow by $50 million in Q4 2025 and $31 million in Q1 2025. This recurring cost is effectively an interest expense masked in the working capital lines. Okay. Let's keep going here. Apparent opportunities. Industrial and zero emission scaling. Garrett is successfully bridging its automotive expertise into the zero emission segment. Okay, in Q4 2025, they secured their first e-powertrain and e-cooling high-speed production wins for 2027. Okay. In 2026 Q1, the company posted a massive 17% growth, 13% cost currency in commercial vehicle industrial lines, showing robust capture of data center backup power generation applications and battery storage cooling infrastructure. Okay. Interesting. So they must be making batteries for data centers as well. That's what it sounds like. Okay. Declining core light vehicle production. Management regularly flags the global light vehicle industry production is stalling or falling, expected down 1% to 3% in 2026. It's not a very large drop. Pricing pressures for OEMs. Now this one here, right? Contractual pricing, net of inflation pass through is a perpetual negative headwind on margins every quarter. $11 million headwind in Q1 2026, $15 million in Q4 2025, 17, and it's increasing. That's a problem. That is a problem. Okay. The one thing we don't like, declining margins. Key catalysts for growth. Hybrid and range extended vehicles, strong execution in light vehicle turbo expansions. Okay, it's fueled by an industry-wide pivot toward hybrid powertrains and range extended electric vehicles. Okay. New production ramp-ups, significant application launches and program ramp-ups became a primary sales catalyst. And Wuhan innovation expansion, so scaling operational and R&D presence in China via the launch of their second innovation hub in Wuhan accelerates regional time to market. Interesting. Very interesting. Key financial data for the Bulls and Bears. Full year net sales expectations were bumped up. They're deleveraging for their debt. Total debt decreased from 1.49, so $1.5 billion to $1.44 billion, pretty much. Anchored by a $50 million early voluntary term loan payment. Margins actually improved. So with all that pressure that they're getting from OEMs, they still were able to improve margins? Just saying, that's impressive. That is actually super impressive. I'm not going to lie on that one. I'm impressed. Let's remember, it says here 11 million, 15 million, 17 million, and they still improve their margins. That's impressive. I'm just going to go there. All right. Or now, however, organic growth is flat and they're in a structural deficit. Despite solid net income, the company still carries a massive retained deficit. So these are your retained earnings and whatnot, right? Okay. Got you. So the squeeze on productivity, efficiency. So while gross margins look stable on the surface, a look into the COGS breakdown shows that structural productivity is slowing down. Interesting. Um, and when productivity slows down, that usually, I mean, it means that costs are increasing, natural increase in costs, and that's, okay. Um, either for them or for their employers. Either for them or for their customers. All right. So shows that structural productivity is slowing down in Q1 2026. Garrett recorded $21 million negative impact from lower productivity net of labor inflation, meaning cost saving measures are losing the battle against rising global labor costs. Okay. Now, tariff recovery timing mismatches. The company relies on direct tariff recoveries, but timing mismatches routinely trigger gross profit volatility. Okay. Then the tax shield exhaustion. Extreme swings in tax expense reflect changing geographic mix benefits. Okay. So, what was the average investor's experience? Let's talk about this here. The average investor has experienced a highly disciplined, shareholder friendly return environment over this multi-quarter period. And if you didn't gather outside of what I said about those margin pressures, I was coming to that same little conclusion here. Um, Total share count was drastically lowered through share buyback program, which kind of makes the equity situation a little worse, by the way. But another time, another talk. This program was refreshed with an additional $250 million, including another $87 million repurchased in Q1 of 2026. Okay. The dividends are increasing, and the company was added to the Russell 2000 in mid 2025, which provided systemic institutional buying support. Okay. Um, the one thing here for me is not going to be what you think. It's not going to be this whole situation about if gas powered vehicles, just go kaput faster than we thought. That's not going to be my one thing focus. My one thing focus is actually going to be the debt. That's the one thing focus for me, because it seems to be a heavy focus for the market. So I'm going to go ahead and say that if this company cannot continue to reduce their debt, that is what's going to lead to a failure of this investment. Okay. In which case, to come to my conclusion, I will go on record as saying I'd be willing to buy this company. I'm intrigued with what they do. And I feel like they have some really excellent way of managing what's going on over there, just to be able to squeeze those margins higher while everything else was going on. It says that's a company under great management, in my opinion. They were first in return on invested capital, and also first in price to free cash flow, which says that they're the highest earner in the group while being the lowest valued in the group. Um, these companies may not all be in the same segment, but at the same time, you know, um, this company has an edge over the rest. So 51 minutes. That's how long it took. It took me 51 minutes to screen the market, sort things out. I dug through 10 companies in that time period. So that's average of 5 minutes of digging per company, but I spent most of my time on one, which was Garrett. Okay. I ran an analysis. I popped open their earnings releases, sent those through to Gemini, had them looked at for very specific things. As you can see, they're being referenced here and here, all through the response. What you put into AI is often depends on, often reflects what you get out. Okay. I found that one thing for me, which was the debt and their ability to continue to pay that debt down. Over time, I would like to see this equity turn positive, and I look forward to that. And I tell you what, I do have to replace one stock in the index that we didn't get to replace yet. And in the spirit of what we always do here, which is put our money where our mouth is, I am going to replace ServiceNow with GTX. End quote. Shall we? Any questions, guys? Any questions at all? Any thoughts?
So I'm guessing you, after investing in it, you would just watch it just to make sure they're continuing to pay off their debt.
Yep.
And then if they stopped being able to, or if they got worse at paying off their debt, that's when you think about cutting it.
Well, remember, I said that would be the one thing that would have the investment collapse, right?
Okay.
So yes, I would look at that as probably the reason why I'm going to end up selling them, right? But it's important to keep in mind, exceptional. It's important to keep in mind that, you know, when it's all said and done, um, I expect the market to punish them for that. So the reason I'll probably be getting rid of them is because they're not performing at all. You know what I mean? Anybody else? Any questions? Any comments? How do y'all feel about 15 minutes of your life? 50 minutes, 51 minutes of your life. Is it worth it?
Absolutely.
Okay.
Not a lot. Thanks so much.
No problem. No problem. Right? Took me 51 minutes, guys, to do all of that work. Yeah, GTX. You got that correct, Wyatt. Right? Just 51 minutes, guys. Right? That's all it took. Right? And I think when it's all said and done, um, you know, the way that we structure our lives, however that's going to end up being. Look at them. They moved up here. They end up being a rank one. GTX is a rank one now. All right. So add one more rank one to the system. Okay. So, at the end of the day, like I said, if we're gonna be investors, we have to think about this here. So that means if you could put aside 1 hour of your day, right? Every so often, you can do what I just did, and you can find yourself some quality investments. If you could put aside 1 hour of your day every so often, you may end up being able to look through several of the companies you already own, right? Because it didn't take me that long to look at the companies, right? Just to double check them and make sure that you like everything, you still like everything that's going on with them, right? So that's what I want to leave you guys with here tonight. with the closing out of this Value Investing 101 is it doesn't take that much time to be a great investor. It really doesn't. All it takes is the effort and the understanding of what you need to be doing. I gave you that understanding. You can go back and you can look at all of these videos. All right, I'm uploading them to YouTube, so I'm going to give you guys the playlist. All right, practice makes perfect, and it prevents poor performance. Don't say I'm practicing this, but I'm not going to do all the things I should be doing. I've heard people say from time to time, I know I should be doing this, but I won't. I should be doing this, but I haven't been. Right? I've heard those things. Okay, that's not the way to go. Because what I heard when I was coming up was what you do in practice is what you're going to do in the game. And if you practice poor behaviors, well, you might end up with some poor investments. And I wouldn't want to see that happen to you. And the reality is going to be this. Okay? If you put the time and effort in, you're going to realize you spent very little time to make a whole lot of money and get rid of a whole lot of stress. That might be that 9 to 5. All right? I'm gonna leave y'all with that, man. Let me let y'all go ahead and enjoy the rest of y'all night. Check this out though. Let me see here. So, on the 13th is when we'll be starting the technical sessions on the 13th. All right. So y'all can look forward to that. No. On the 6th, I meant to say, not the 13th, the 6th. We starting the technical sessions. By the way, and actually, no, we're going to start the technical sessions on the 8th. On the 8th. Friday, remember we said we were going to do, on Friday, we said we were going to watch, what I said I was going to put on for you guys on Friday. I got it written down, so I will remember. So on Friday, we're going to be looking at, I got it written down. I'm going to remember it. I was supposed to show you guys a documentary on Friday. So show up if you want to. All right. I gotta get this. I got it written down here somewhere. All right. But Enron, yes, thank you. Yes. So on Friday, I'm going to be showing you guys the story of Enron. That's actually going to be our real true closing out. So I want you guys to see what happens when you invest in things that you really can't tell what's going on. Show you guys what that really looks like. All right. Thank you, Doreen, by the way. All right. And yeah, you guys are gonna be because I think one of the things that led to that was somebody asked about the CFO. I know that was one of the things, and I was like, look, you'd be surprised, man. Like these CFOs come under pressure to do a lot of things that you wouldn't believe, you know. And I know I talked about the story of Enron a little bit, and you guys gonna see like how that CFO, the role the CFO actually played there. I don't want to spoil it for you guys. I'm not gonna say anything else. See you on Friday. Story of Enron. We're gonna tap into it. All right. Anybody? Again, one more time before we go. Any questions? Any comments? Anything? Going once. Going twice.
I just had one question about that. What platform should I be looking for that message you're going to send out?
What message?
You said you were going to send me D'Amica a message, but I
No,
just...
no. I'm sending it to you text message.
Oh, okay.
No, I got you though. I'll let you know.
I just want to know where I was supposed to look for it. So, all right, cool.
Yeah, I'm sending it to you text message soon. You'll have it soon. All right. All right, brother. All right, guys. Everybody be blessed. Stay well and enjoy the rest of your night. Later.
You too.